So today we're going to talk about Burberry stock after it crashed again yesterday, and we're going to take a look and see my updated thoughts on this one. I always get asked about this one in the comment section if this is a good stock to be buying, so I'll give my thoughts once again on Burberry. But if you could, make sure you hit that like button. It really does help the video get out in the YouTube algorithm. If you don't like it, then it doesn't do that well, and that's what's happened with a couple of videos recently. The likes have dropped off a little bit, and that means the videos aren't getting pushed as much. So for all this free content that I do for you guys, if you could, that'd be absolutely amazing. But let's get stuck onto Burberry. Now, just a quick shout out, if you're on the Patreon, I did drop an exclusive video on there, which was Green Coat UK Wind. We took a look at that UK stock to see if it was a good stock to invest in my opinion. So if you do want to see 2 exclusive videos a week, join the Patreon. Link in the description, £5 a month. But we're going to talk about Burberry. We've talked about Burberry, I think, twice on this YouTube channel before. One was around about 3 weeks ago. I think the other one was a couple of months ago, which wasn't an actual dedicated video, but the one I did 3 weeks ago was a dedicated video to Burberry stock. And by the way, what a cracking thumbnail that one was. I think that's probably my favourite thumbnail of the year so far. But on the video 3 weeks ago and the video that I did a couple of months ago, both times, in my opinion, I've said that Burberry is not a stock to be buying. It's not a stock that I will buy. I think there's a lot of issues going on with that stock. Now, obviously, it's turned out that was a pretty good decision as the stock crashed 16% again yesterday. And I think it's been a tough time in general because the last month it's down 24%. So it's been a pretty good call avoiding Burberry stock. Now, I'm going to say it, if I did get this one wrong, I would have heard it mentioned in the comment section for the next 4 years, but because I did call this one right, no shock there. It's a little bit quiet in the comment section. No one's saying good call there. It's been a little bit quiet, but I tell you, if I got this one wrong, it would have been in the comment section for the next 4 years. It does make me chuckle. Maybe it's time to just be like many UK investors and not put your neck on the line and just stick to reviewing trading to 1-2 and Vanguard. But Burberry stock, so it's down a big amount yesterday. The stock was down 16%, and overall it's just been a terrible year for it, hasn't it? 46% down year to date, and we're only halfway through the year. It's absolutely horrible for Burberry. Now, I always said, in my opinion, there's a lot of issues going on here. I think the dividend is a little bit of an issue. I don't know how sustainable that is. And I always looked at the valuation. I looked at the valuation, in my opinion, I looked at the issues here, and I always thought the valuation was actually quite expensive when you price in the current issues that are going on with Burberry. Now, there was a lot of changes made in updates yesterday, so I'll try to go through them all nice and quickly. So the first thing is, they brought out a trading update yesterday. The trading update was a profit warning, basically. It was probably one of the worst profit warnings I've seen for a while. I didn't realise, I thought they were just doing a management change, and then I actually realised, okay, they've actually done a profit warning as well. And when I read this profit warning, I was actually quite surprised to see the stock not down more, because what we saw here is basically everything that could go wrong with a business went wrong with a business in this trading update. So they basically said that they had the weakness coming into financial 25, and they said it's got worse, basically. So Q1 was bad, Q2 has got even worse for business, is what you don't want to hear. It's just getting worse and worse for business. You at least want to see maybe some stabilization going on here. Now, this is what you definitely don't want to see, is that they said that if the current trend persists, so that is that it's obviously got a lot weaker, through Q2, we actually expect an operating loss. That is not what you want to see. So you've got a company that is doing bad in Q1, it's got worse in Q2, no stabilization, but then you've also got a company that potentially could go unprofitable. That is not what you want to see. When we get onto the balance sheet with Burberry in a little bit, that's also a big issue. So one thing that you would always say about Burberry is that at least they were profitable. Now, because they're not profitable, then you actually have that risk of, okay, this is actually getting a little bit worrying now, where they have their balance sheet they currently have, and then they're not profitable. It could get really messy for the company. Now, it did lead them to suspend the dividend payment. I cannot believe it took them to this point to suspend the dividend payments. This is something that I called out 6 months ago, I think, on the YouTube channel. And I always say this, if I'm noticing things before management team, that's always really worrying. You know, if a guy in a spare bedroom is noticing that the CEO of a business is making the wrong decisions and he's there running the business, that's always a big worry. And I can't believe it's took to this point for them to do that. Massively worried. And you look here at the moment, the actual retail revenue was down 20%, which is very weak. And if you look at all the areas as well, I mean, Asia Pacific, which is supposed to be the major growth driver that people talk about for this business, is actually the weakest area. Europe not so bad, it was still down 16%, and America down 23%. It's just horrible reading. Now, with top of that, they also came out and they updated that they were going to get rid of the CEO. Now, the CEO that's currently in has been since 2021. Clearly, we are, 2.5 years into that, and with 2.5 years is enough time to settle in a business, put your stamp on it, start to hopefully see the green shoots, and clearly that's not happening. You only have to look at the new trading update and see that that's not happening. And also the choices, which we'll get onto a little bit more with the dividend and the balance sheet, has also pretty much wrecked the business as well. So for me, the CEO had to go. I think this was the right decision. And in fact, I probably would have made this call around about 6 months ago when you're looking at some of the decisions that he was making with the business. Now, they have brought a new CEO in, which is Josh Schulman. I had a look at his history, and I'm not confident on this appointment either. You look here, he was the CEO of fashion brands at Michael Kors. He was basically in that role for like less than 12 months, and he suddenly got removed from his position. That's never a good sign. That's never a good sign when something like that happens from a business like that. So, a little bit worrying that the new person they've got in has also got a bit of a checkered past at the moment. Maybe, it just didn't work out, but you would hope that potentially it was someone better than that. But who's going to really come in and take this business? It's a business that's really struggling. You are going to be very limited on your choices. So, a little bit worrying around the appointment. But the thing is, though, is that we'll judge him after 12 months. 12 months is long enough for him to come in, put his stamp on the business, and hopefully see the green shoots. I mean, realistically, it needs a big overhaul. You go on the Burberry website and, you look at some of the products that they're doing, and they're just not attractive products at all. For example, I went on the men's section and I went on the coats and jackets. And to say how much, these items are costing, thousands of pounds, I was like, they're all ugly. Look at this one here with this big logo on the side. It just doesn't look smart at all. I think Burberry as an actual brand is okay, but I don't know who they're getting in doing some of these designers. This design here is just, no one's really going to go down the street with a coat and trousers on looking like that, are they? And willing to spend $1,700 on it. It just needs a complete overhaul, in my opinion, and maybe in 12 months we start seeing that coming through. That's how long it normally takes a fashion brand to start turning around. So we'll come back, but I think that the designer is definitely the designers team that are in there need a big turnaround in here. But the problems have really been deepened with the last CEO. The last CEO, in my opinion, has made massive amounts of errors. He's basically self-destructed the balance sheet. If you look at the net debt, for example, the net debt has gone from 460 million in 2023 to 1.125 billion. That's a treble of the debt. And if you go on Simple Wall Street, they're a little bit slow to update the figures at the moment. But when these figures do get updated to the current figures, the balance sheet is going to look awful. We were talking about a company here that 4 years ago had an amazing balance sheet. It was a clean balance sheet basically. 3% debt to equity, that's absolutely fine. But now when this balance sheet gets updated, the debt to equity is going to go up to over 100%, which is awful for the business. And then you look at the cash balance, it was 362 million compared to 961 million. They've burnt through, nearly 500 million of cash, which is absolutely crazy to burn through that amount of cash. And the way they've done it is they did a 400 million share buyback. It's nice doing a share buyback, but you don't do a 400 million share buyback when you're going through this situation. It's, when you're in a financially bad situation, you don't go spend half of your cashes on your balance sheets money on a share buyback. That's absolutely that's sackable from a CEO. Obviously he has been sacked, but how this got approved is beyond me. And the fact that they're still paying the dividend, the fact that they were still paying a dividend that was a very expensive dividend, is once again cost them massively on the balance sheet. Another terrible decision. They should have been cancelled 12 months ago, but yet somehow the CEO and the board and the management team there were all like, go for it. And they didn't really notice that. It's so basic decisions that they've totally got wrong here. And also as well, they've also taken as well on top of that, they've actually taken a medium-term bond on here. No surprise, they had to take it because the balance sheet was absolutely wrecked from the current management team. Fair enough. I'm going to point this out, to be fair, that the actual chairman of the board and CEO did buy some insider buy-in on the November and December. They were buying at £14, £15, and the shares have basically halved since that time frame. I'll point out that, quite often we look at insider buying and we go, oh, look, insider buying is good. But here's an example where, okay, you got insider buying, but yet the shares then fell in half from here. And sometimes, you do get excited about insider buying from key roles, and sometimes it isn't actually always turned out to be a good thing, and it can actually get a lot worse. I thought I'd point that out because normally we do point insider buying as a good thing, but this is an example where it hasn't worked out. I mean, overall with Burberry, when I look at the stock, it's a bit of a shame, really, because I do think the brand is good. I think they've got a horrible designer team in at the moment that are just making products that are absolutely awful. I look at the previous management team, they haven't turned it around, the designs are poor, the brand's currently not popular at all, selling wise, and that's no surprise when you look at some of the designs they're making. The dividend that they've been overpaying is crazy, the buyback they did is crazy, the balance sheet damage, I cannot believe that management team that they've had in place has absolutely wrecked the balance sheet. This could be a total different story. If we talk about a company that had this balance sheet still from 2019, we could be talking about a different story where this could actually be maybe something attractive. But when all these figures get updated on Simple Wall Street with the current debt that they have and the current cash pile they have, it's going to look awful for them, guys. And it's a big way to come back from a balance sheet that's been wrecked that much. And the numbers, the fact that these numbers are just getting more awful as it goes on, is so worrying. The new management team that come in have a big job to turn it around. And I personally, for me, I would not touch this company at all until I saw some signs of recovery. I don't, if you're buying now and you're doing like a little bit of house money, fair enough. But to be seriously considering this a decent sized position in your portfolio, I think you're gambling. I think it's red or black, because especially with the balance sheet they've got now as well, it's 50-50 whether or not Burberry gets through this mess, in my opinion, and that's gambling. And when you're investing, you don't want to be gambling, and that's gambling, in my opinion. So I personally think there's a few worrying things going on with this business, and like I said, I'll keep on a watch list, but I'm at least going to give it 12 months to see some signs of recovery before I'd even consider it. And even then, I think the damage may be done on the balance sheet point of view, so it's not good for Burberry at the moment anyway, guys. Hope you enjoyed the video anyway. Like I said, if you did enjoy the video, just make sure you hit the like button for me, guys, and if you're new around here, subscribe, and I'll see you in a bit.